places that you would like to go. But outside of that, I've no use for dough. It's the root of all evil, of strife and upheaval. But I'm certain, honey, that life would be sunny with plenty of money and you.
Vero's Voice presents The Art of Investing with Art Espinoza.
Good morning. You're tuned in to The Art of Investing. I'm Art Espinoza. Welcome back. Those of you tuning in for the first time, I'm here every Saturday morning from 9:30 to 10 o'clock right here on Waxy 1370 AM, 107.9 on the FM dial. Also, iHeartRadio.com if you choose to listen to us on the internet. And I also want to let you know one of the things and why I call this the art of investing is because it is an art. It's not easy to do. And I've been in the industry 28 years, and it's not easy for me. That's why whenever I can get an edge, I do it. And I refer to experts in specific fields to give me a glimpse of what might be forthcoming in the economy. I look to the manufacturing industry often. I look to the trucking industry. And I'll give you an example there. I have interviewed many trucking industry experts, and I have found as their business goes, the economy seems to pick up on that 7 to 9 months later. Meaning, if I'm talking with someone that is, say, a medium-sized trucking, maybe 15, 20 big haulers, and he tells me that business is really starting to pick up, we can count on that 7 to 9 months later to see the pickup in the economy. So you can, and I've done it long enough, 10 years or more, I've been using that as a very reliable indicator, and it has never let me down. So that's one industry that I always look to. Like I said, manufacturing as well. But there's another industry that I look into often, and could be probably just as important, if not more important, is the lending industry. And that's where my guest this morning comes in. And he is Michael Kanuka. He is Ocean Mortgage Capital. He's right here in Vero Beach, Florida. Michael, welcome to the show.
Thanks very much, Art. Pleasure to be here.
It's great to have you. Michael, tell us a little bit about what you do. What is Ocean Mortgage Capital?
Well, thanks, Art. Ocean Mortgage Capital is a real estate mortgage brokerage company. And what we do is we essentially help people find loans for their homes and for their commercial properties. So what I do is, after having about 20 years of lending experience and then having started my company, I'm essentially doing the same things that I used to do as a lender. But in this case, instead of being a one-source lender with a limited number of products with one bank, what I'm able to do is open up the avenues and the abilities and the selection of loans and loan products for people and my clients. So as an example, I can go to the good community banks of Vero Beach, I can go to some of the state banks, and I can go nationally. And having worked and invested in real estate and loaned funds in both Canada and the United States, I'm able to even go internationally. So what I love to be able to do is help people find the best possible deal to save them time and money, and that hopefully is how they've reacted to the successes of Ocean Mortgage Capital.
And so basically, someone could be looking for a mortgage, gone to every bank, really not happy. So with the rates that they're getting, not that they're not happy with the bank or the people, but the rates they're not getting, but they should consider you. They should at least call you, right? At least.
There's no harm in calling me just to get advice, and I'm here to help people find the best possible solution. And if it means that I recommend one of the banks here or some other bank, so be it. But in many cases, what I'll do is introduce them to a lender who has done nothing but specialize in the exact area that they are. They focus on it. There's economies of scale so they can pass the savings on to that client. So there's never any harm in checking with me first before you make that final decision.
Yeah, it's like when people, I know a couple of people in the P&C, property and casual industry, they'll open up the phone book, and they will literally call 30, 40, insurance, homeowners insurance, car insurance guys. They'll literally call them. Michael, so I would imagine they would do it as they should, put you on their call dial to call if they're looking for interest rates. If they're looking for, so if they just want to know what the current interest rates are, can they call you?
For sure. And my service is, there is no fee for a consultation. I'm happy to meet with anyone at any time. The only way that I get paid is if they elect and select the product that I identify for them, and they close that deal. And that's how I get paid. And typically on the residential side, I get my fees paid by the lender. And as a result, there's absolutely no harm in having them come to me for advice. And the beauty of it as well is I can go to them. And my doors don't close at any time. I'm available evenings and weekends and happy to discuss with people at the most convenient time and place for them, including their home.
Yeah. Michael, and I know I used to ask this all the time, what is the difference between a mortgage broker like yourself and a bank? Just a regular bank.
Well, and just briefly having mentioned the idea of the number of products that banks offer, banks, and I know because as I mentioned, I've been a banker, was a banker for many, many years and ran offices, so I understand that people want the best possible service. And unfortunately, some banks can only have a certain number of products being offered. And there are times when they might not be able to have a FICO score that's acceptable. They may not fit into the box of that particular lender. Whereas with Ocean Mortgage Capital, we can take you to almost anywhere and other investors, private investors, lenders, pension funds, and a variety of different financial solutions that gets you the best possible solution for your needs.
Oh, okay. So basically, folks, he's Michael Kanuka. He's with Ocean Mortgage Capital. Like I said, he's right here in Vero Beach. And I'm excited to have him as a guest. I've talked with Michael several times. Michael, over the course of the last few months, what do you see right now? Are you working more in the residential markets right now? Are you seeing more commercial lending? What's moving in the economy right now that you see? Who's wanting money out there?
Well, from a commercial standpoint, there is always money that is being required to be refinanced. So there are debts, there are loans that are always renewing, whether they're 3-year, 2-year, 5-year fixed rate mortgages, or even variable rate mortgages. So the commercial folks are refinancing at any given point in time, particularly those who have been locked into a rate for quite some time. And the commercial rates are so low that it's been a kind of a situation for most people to stay on a variable rate basis because of the indexes that are being so low. On a residential side, on the mortgage side, there is a lot of activity right now because people are buying homes, and particularly at this time of year coming into Vero Beach where you have the
second home buyer?
Home buyer.
Right. That's
exactly. And people from the northern countries, including Canada or even part of the northern states, they're coming back to buy vacation properties. And so as a result, you'll see a lot of the community banks here very busy, and you'll see people that are wanting to buy that home because they're concerned that possibly they've missed the boat potentially, and they want to be able to get in as quickly as they can.
Yeah.
So
I can't believe we got less than a minute left, and before we take a break, folks. In fact, I'll touch on that point when we come back from break. He's Michael Kanuka. He's my guest right here on The Art of Investing. He's Ocean Mortgage Capital. Give Michael a call, 772-453-2850. Folks, I can tell you I know him very well. You can trust what the rates that he has. He'll work very hard for you. I'm excited that you're here, Mike. We're going to take a break, and we'll be right back.
Thanks.
But I'm certain, honey, that life would be sunny with plenty of money and you.
He's Michael Kanuka. He's Ocean Mortgage Capital, and he is my guest. Welcome back to The Art of Investing. Michael, before we went to break, I was going to ask you something, and I'm going to ask you now, or at least make a comment. I can't help to believe that with the nasty winter that is going on up in Wisconsin, New Jersey, New York, up and down the coast, even in Atlanta, that we're not going to see just a mass exodus from up there to down here in Florida. So I got to believe you're going to be getting busy.
Well, it's happening already, Art, and it's a great observation. And what I'm hopeful about is how things should really work is that instead of coming down and taking a look at the marketplace and meeting with a bunch of people to see properties, the people really should know exactly what they can qualify for. And so it's a quick phone call where I can speak to them in a matter of a couple of minutes to tell them approximately what sort of loan they can qualify for. Then I can turn them on to one of the great realtors that we have here in Vero Beach or throughout the Treasure Coast, or perhaps they have their own contacts that they can utilize. But it's much better for them to be in a position to know what they can afford before they go ahead and jump into the market.
Speaking of, you have a website, and folks, his website is www.oceanmortgage.com. So on your website, if somebody's in New York, New Jersey, in Wisconsin, where this show actually gets aired on iHeartRadio.com, somebody's interested in, they looked up Vero Beach, on the internet. They see they like a house. They want to call look up on the internet, oceanmortgage.com. Can they get an idea of tell us a little bit about what they can find on your website?
Well, that's a good question, because when it comes to interest rates and people are wanting to know what they can qualify for, there's a resources section on my website that takes them directly to interest rates where they can figure out both on a residential side, what are mortgage rates today? On the commercial side, where are the LIBOR rates or any of the other commercial indices that would be used by clients and banks nationally or locally? And they're able to determine some of the treasury rates, which are oftentimes a good barometer of what's happening with the long-term interest rates.
That was my next question. But before I get to that question, are you doing more commercial lending right now than residential? What would your mix be?
It's about a 50-50 mix.
Wow.
It is.
That surprises me. But on the commercial side, because this is important for me to know, for my listeners to know, that the lenders are the ones borrowing on the commercial side are doing just refinancing. Basically, they're not building plants. They're not building.
For the most part, that's correct. Yes, you don't see a whole heck of a lot of development going on at this stage. Not in this particular area of Florida. You'll see it much more in the southern parts. So people that are going down to Miami are going to see a whole heck of a lot of cranes that are in place, more cranes there than probably more so in some of the major centers.
And now, which brings me up that those people down there, I read recently in the Palm Beach Post, I think a Sunday ago, that down there, they're buying them for cash. Mm-hmm. They're Canadians coming in or foreigners. A lot of foreign money is coming down there and buying them for cash, which, folks, tells you that what you read the entire article, because we get this false sense of security that everything's on the mend here in the United States, and I don't agree with that. And I don't know how much time we're going to have, but there's a lot going on, and like Michael said, the commercial end is a good part of his business. And they're just refinancing, which isn't a bad thing. Now, how about the residential? Is it new homes, second homes? Where are you at there?
Well, to the same point we were speaking about earlier, the snowbirds are coming down and they're looking quite actively at this time. And so as a result, you're going to see much more purchase kind of activity. As far as refinancing on the residential side, most of them have already refinanced if they've had properties, because, let's face it, rates have been down for quite some time. There has been a tick up in rates, but it hasn't been anything material enough to worry about. They're still among the lowest rates that you're going to see. So people are still excited about putting debt on their property because it's so cheap. And in fact, to your point of the international investors coming into Florida and buying for cash,
absolutely,
some of those folks are actually borrowing, even though they don't need to, because they know that their investment advisor is able to invest at a higher rate than what they're paying.
Right, even money almost. I mean, if you're what he's pointing to, folks, is that, if you can get what's a 3.5%, 4% maybe on some arms, maybe
even less than 3.5% on a 15-year fixed rate mortgage.
And so you get a 20-year bond, say, I don't know, DuPont or Dow Chemical, that 5.5, 6. There you go, right? Something
Exactly.
like that. Yeah, that's that excellent point there, Mike. I appreciate that. Now, the Federal Reserve this week announced that they went from 85 to 75, now to $65 billion a month. The interest rate, the 10-year note, the one I follow closely, 7. I follow them all, but the 10-year note went down. It's down to 2.71 in that neighborhood. The markets went down. The Fed seems to be signaling that everything's on the mend here in the United States. I'm not so sure I agree with that because I think it was Ben Bernanke's his last FOMC meeting as the Fed chairman. And so I think he wants to go out, and this is my opinion, I think he wanted to go out saying, well, when I left, I went from $85 billion to $65 billion on the tapering deal, even though he started the $85 billion a month. But we won't go there. I think the market, I think the stock market is telling us that we are not really on the mend in this country. We have a tough road to hoe ahead. What do you see? What's your opinion on the interest rate market, both short, medium, all the way up the curve, long?
Well, I think the good news is that with this recent announcement of it going down to the $65 billion, which is an astronomical number for anyone to grasp, but the fact is, a month, it's incredible. That gives you an indication as to how much debt the government is accumulating. And with all of that debt, there has to be a very big caution in Washington that's going to focus on interest rates, not just for the economy and for all the businesses, but also for the consumer. And the consumer, having made up most of the GDP,
right, 70%.
They are really the focus. And so they can't just start jacking interest rates up in any material fashion because, number one, the consumer would have a backlash. And then number two, they're penalizing themselves because they're adding to the debt by having to pay higher interest rates themselves when they're borrowing funds.
Michael, the Fed in their statement, and they come out with a statement every time they make an adjustment to monetary policy, they stated that they are looking to keep short-term interest rates very low throughout 2015 and beyond, was the quote, and beyond.
Yes.
Now, if somebody's looking to buy a 30-year, they're looking for a home and they want a 30-year, would you advise them to go a traditional 30-year, maybe a short-term, and then convert later to a long-term tradition? I mean, what would your advice be there?
Well, it would depend upon what their risk profile is, and that's why it's always good to have a quick consultation to determine where they are going to go. For example, the people that are buying vacation homes, some of them know that they're only going to be coming in for an investment purpose. They want to just rent it to some users for some time, ride the market up a little bit, and hold it for 5 or 7 years. Well, in a case like that, you probably shouldn't go and lock in for a long time period because you can do so much better on a variable rate basis if, in fact, you don't think you're going to be in that property for a very long period of time.
And, folks, you can hire somebody like Michael Kanuka and get that 3-year, 4-year arm, and he'll stay with you. And then when you're ready to do some things, right? Don't you? You got him all along the way, right? I mean, I
do, and that's what I pride Ocean Mortgage Capital on, is that the advice that I can give is before, during, and after the closing. I'm with you throughout the time that you own your property, and whatever kind of advice that you need during the year after we've closed the transaction, I'm available to you at any time. That's
great, and. Folks, he is Michael Kanuka. He is Ocean Mortgage Capital right here in Vero Beach, Florida. His number is 772-453-2850. Ocean Mortgage Capital. His website, www.oceanmortgage.com. Michael, we are out of time. It has been great, folks. He's going to be a regular guest from time to time. We're going to continue to see what's going on in this lending rates, what's going on with who's borrowing, who isn't. But this is the Art of Investing. Thanks for listening. I'm Art Espinoza. Have a great and prosperous week.